Welcome to this week's weekly technical analysis. My name is Joel Chandran here at Train to Invest. We will cover the week for October 21st to 25th of 2013, looking at the Toronto Stock Exchange, the Focus 5 stocks, oil, gold, silver, and several commodity-related ETFs. First chart, we have the 3-year weekly chart of the Toronto Stock Exchange. As you can see, 52-week high for sure. Very strong signs of growth over the last 3 weeks. And as you notice, we closed higher than we opened, a very good sign. Looking at the MACD and the MACD histogram, the histogram bars have been increasing over the last 3 weeks. We saw the largest increase this week as the convergence and divergence continues to grow on the positive side of things, which is exactly what we want, showing that strength is in the index. Now, how long this is going to last, I'm not totally sure, but since pretty much, I'm going to say August, September, we've been on this huge run, and we've seen a lot of positive growth despite the geopolitical situation in the United States and all around the world. RSI and stochastic are both heading higher. You can see that the RSI has hit the 70 mark, and usually that's when we say the index is overbought. But as you know, with a very steep uptrend, that's going to happen. The RSI is almost at 100. Again, the same indicator, but with a very steep uptrend, we know that that's still the case, where it's going to hit the upper bands and just stay flat until things contract. So on the 3-year weekly side of things, we do see a lot of strength in the TSX, which should carry over to next week. Again, we're coming up close to the 13,500 mark. And again, this has been a level of resistance for a very, very long time. As you can see, the last time it was anywhere this close was July of 2011. So a long time ago. Looking at the 6-month daily chart, you can see over the last couple of weeks, it's just been a steep uptrend. MACD and the MACD histogram continues to grow day after day. Again, we did close higher than we opened on Friday. Very strong positive growth. For the day, the TSX was up 74.67 points, or 0.56%, to 13,399.42 cents. So a good steady increase. RSI is starting to hit flat, but we are in the overbought section of the indicator. And stochastic we put as blue because it's pretty much hit the $100 or 100-point section, and it's going to be sideways. Both indicators are going to move sideways as we move forward if the TSX can continue to show very, very strong periods of appreciation. Over the last 6 months, this is the highest it's ever been, and that is a good sign, but also a bit of a scary sign because we have to wonder where is it going to plateau and where is it going to contract in the coming weeks. We could see a good November, December, and then January, things start to fall apart. But again, that's just some speculation on my part. Looking at the indices or indicators themselves, should see some strong growth throughout next week as well. Here is the index compared to its indices. As you can continue to see, minerals, materials, and gold all remain below the index itself. Over the last 6 months, the index has grown approximately 10%, and mining has grown 5%, and both materials and gold are below 0%. Looking on the positive side of things, as we look at the indices which are outperforming the sector or the index itself, consumer discretionary is up 21%, almost 22%. Consumer staples is up almost 15%. Energy is up almost 13%, and financials are just below consumer staples at 14.85%. So these still are 4 indices to look at. We can see where the money is flowing. This is the TTCD, otherwise known as Consumer Discretionary Index. And as you can see, we have a couple of strong stocks in the sector. Magna is up almost 50% over the last 6 months, a massive, massive increase. The blue is Canadian Tire, which is up almost 33%. And the red is Gildan Athletic Wear, which is up almost 24%. The index itself is up 21.74%. Tim Hortons is up 17.5%. Thomson Reuters is up only 9.8%. And in the orange here, we have Shaw Communications, which is almost at 7%. So pretty much if you looked at Tim Hortons or Canadian Tire, some of the more popular names here in Canada, you would have made money. The index itself is up 20%, and that's mainly due to Magna being part of the equation. But again, similar to show where the money is flowing. This is the Consumer Staples Index. Overall, the index itself has grown 14.92%. The outliers we have is Shoppers Drug Mart with the sale pending, and I'm pretty sure it was confirmed and approved over the last week. So Shoppers Drug Mart has bounced quite high, but is up to 36% there. The blue, we have Element Couche-Tard, which is a convenience store owner-operator. They're up almost 19.5%, and then Loblaw is up 16.2%. Weston is up almost 13%, and then Saputo and Metro are below, well below the index itself. So that you can see that in both we have 2 strong stocks which are really putting the index up. But if you look away from that, we still have strong competitors with both Loblaws and Element Couche-Tard. So again, you can see where the money is flowing. And capped energy index here is TTEN. So we have the energy index is up 12.68%. And above the index is IMO at 14.64% and Suncor 27.23%, both which happen to be Focus 5 stocks. So again, the Focus 5 stocks are outperforming the index as a whole. The blue, we have CNQ at 10%. The gray, we have Talisman at 8.3%. The red, Synovus at 5.52%. Husky Energy in the orange at almost 4%, and in the green we have Encana. So again, you can see the more diversified the players, the better they've done over the last 6 months. And last but not least, we have the financial sector. Now, I did cut out some of the insurance players. I kept, like for example, Power Corp and Power Financial. I kept the major insurance players and the banks. Just for clarity's sake. And you can see over the last 6 months, the index itself is up 14.85%. Above that, we have Royal Bank at 15.23%. In the brown, we have National Bank at 18.32%. The green is pretty much exactly where just below the index itself, and that's CIBC at 10%. We have the kind of baby blue, lighter blue at 25% or 25.5%, and that's Sun Life Financial. TD, despite its massive growth, is only up 15.46%. And this purple one is Manulife Financial, and it's, again, 22.76%. And the reason why I would expect or suspect that these insurance stocks are doing quite well is because of the Bank of Canada keeping interest rates at 1%. So again, they're able to increase their profit as their margins widen versus the Bank of Canada. Down below here, underperforming in this index, we have the green, CIBC, the red, Bank of Nova Scotia, and the orange, Laurentian Bank. So again, a lot of potential for growth. If you look at TD, it's at 15.46, and Royal Bank is at 15.23. Both are above the index itself. Again, Focus 5 showing you growth. Now looking at the price of oil over the last 6 months, we've seen an appreciation of $6.29 or 6.87% growth. It was much better here in September when we had the $110. We've seen it decline 10, almost 13 bucks since its high in September, obviously due to the lack of action in Syria and Middle East conflict. So oil sands producers do not like having it this low. They would like to see it above $100. That's a nice, healthy profit margin for them, but we're beginning to see oil turning around. Here is a 3-year weekly chart for Enbridge. Bit of a plateau over the last couple of months, but over the last 3 weeks, we've seen 1, 2, 3 weeks of higher highs and higher closes. Good sign of a strong uptrend. And again, we closed higher than we opened for the week. Positive sign. MACD and the MACD histogram, we almost have a MACD crossover. And once this MACD crossover occurs, that's a very strong buying signal. And the reason why I'm optimistic about Enbridge, you see the RSI and stochastic are both heading up. There's still room for it to grow and move higher before it reaches the overbought status. And with 3 weeks of appreciating prices and shrinking histogram bars on the negative side, I would expect next week to either be the MACD cross or the week after, depending on any external events. But again, it's looking really good for Enbridge. We saw it almost happen here, but again, we waited a few weeks, almost 2 months, and now we're much closer. And it's very interesting to see us come up close to this 45 mark, because once you break through 45, looking at 47.50, and then we're back to very strong Enbridge growth. Looking at the 6-month daily chart, Friday we did close a little lower than we opened. Enbridge closed down 5 cents or 0.11% to $44.33. But for the week, again, strong appreciation. We broke through 44, and we stayed above 44 with the close. If we're able to break through 45, 46 and 47 are quite easily within reach. Now, looking at the MACD and the MACD histogram bars continue to rise. MACD is positive. Very good sign. RSI, we touched the 70 mark. We didn't enter the overbought capacity. Bit of volatility today helped push the indicators both lower. I kept them in blue because we're heading sideways, and that's indicative of a strong uptrend. As you can see, past 1, 2, 3, 4, 5, 6, 7, 8, 9. Well, in the last 10 working days, we've seen this uptrend continue and have not broken through. So there's a good sign that while there may be a bit of a contraction, a very slight contraction, the growth will continue over the next week. 3-year weekly chart for IMO. Again, 1, 2, 3 weeks of higher growth. We pretty much closed a tiny bit lower than we opened for the week. Hence, we see the RSI heading down, and the RSI flat, and the stochastic heading down. MACD and the MACD histogram are both green and both positive, but the histogram bar is shorter than last week. We could see a potential pullback towards 45 before strong appreciation, or we may next week just see some really strong growth, depending both on oil prices, which begin to look like they are rising, and so we could see the volatility we saw this week ascend into next week. 6-month daily chart. Monday we started off high. Tuesday, Wednesday, Thursday, Friday, not so great. We did touch 46, and we did close almost at 46. Closed higher on Friday, 37 cents or 0.81% to close at $45.96. We just closed just underneath the resistance line. What really impresses me or makes me excited is that we have a RSI cross here. Sorry, a stochastic cross here. RSI is heading higher. MACD and the MACD histogram are both positive. So that indicates that while we didn't break through resistance today, momentum is with the stock. We've seen it turn around, and I expect that next week we will see some strong growth, potentially again back up to 47. If that does occur, it might be something to keep watch of, especially with the RSI crossover here. On to Suncor, 3-year weekly chart. I would have to say, again, another 52-week high established here for the stock. Hasn't been anywhere close to this since, I'm going to say, January, February, March of 2012. So it's been a long time since we've been up here at 37 bucks, at 37.50. We are close to overbought, so the RSI is flat, as we do see a bit of a pullback, as we do see a lower close than an open for the week. And that obviously has pulled a bit of the momentum away from Suncor, and we have a potential inflection point here. We could see it bounce higher if oil prices rebound, and it could be a good week for Suncor next week. But it is new territory that has been here for a while, since even before 2012. So a lot of non-memories are here. A lot of the memories are negative, but 37.50 is a very strong price point for the stock. 6-month daily chart, we did see appreciation here on Friday, made up for the declines from Tuesday to Wednesday. MACD and MACD histogram are flat. Histogram is just very, very, very tiny below the zero line, so it's just barely negative. But again, with Friday's appreciation, RSI and stochastic both showing strong signs of growth, and momentum is there. So if we see oil prices rebound next week, Suncor could possibly break through the $38 mark. For Friday, it closed up 59 cents to $37.66, a 1.59% growth. Strong growth here on Friday. So if you're following the 1% rule, you would have hopefully have made some profit this week. If you'd got in a little earlier, it would have been a little tougher. But Tuesday or Wednesday, Thursday would have been great entry points regardless. Flipping over to the bank and the bank side of things, Royal Bank put in another 52-week high. Couldn't break through 70, and we ended up closing lower than we opened for the week. Not necessarily the best sign, indicated by, you can see momentum pulling away through the stochastic. RSI reached over the 70 mark and pulled back down. So again, it is flat. MACD to MACD histogram showing that strength is there. Histogram bars from last week to this week are essentially the same. The MACD did grow a bit over the week-to-week gains. And again, positive news from the Bank of Canada saying interest rates will be kept low for the time being, and the stock continues to grow. Looking at the 6-month daily chart, Monday we broke through 70. Tuesday, Wednesday, a bit of a reconciliation before Thursday, Friday being tiny and flat. Looking at the MACD and the MACD histogram bars are shrinking day by day as you see the divergence shrinking. On the positive side of things, RSI, again, flat at the 70 mark, so we're not quite overbought yet. Stochastic showing that appreciation from Thursday to Friday, and that could push into next week. But again, depending on the U.S. dollar and other financial news, external events could easily push the stock back down to 68. But for now, things are looking good for Royal Bank. TD, 52-week high. The stock just keeps going higher and higher and higher. We closed higher than we opened, unlike Royal Bank. MACD and the MACD histogram, both strong, both positive. Histogram bars are even in terms of growth week to week, and it has been for the last month. So we see that there's a steady increase in the MACD itself. RSI, we still haven't hit the overbought period, so there's still room for it to grow. Stochastic, we're almost there, but again, with it being green, there's still room for TD to go, and it could potentially even reach 95. Royal Bank only closed up 9 cents on Friday, but TD grew by 53 cents to $94.10. So it's not inconceivable that next week we see it touch 95 or even break through 95, all things staying the same. 6-month daily chart, while the stock itself hasn't been very volatile on a day-to-day basis, we do see the appreciation continue to grow. A bit of a lower close in the high has caused the stochastic to be blue. We have an inflection point, and I would expect that we do see this cross the upside. RSI still just above 70, so it is technically overbought, but again, room for it to grow. MACD and the MACD histogram, we are showing some growth, and compared to the last 5 weeks, the histogram bar is appreciating. So for the last 5 days, histogram is appreciated, showing that there is divergence on the positive side of things, and that's exactly what we want. So there is room for it to continue to move higher, so 95 may not be inconceivable. This is the gold chart, 6-month daily gold chart. Over the last 6 months, gold has fallen by 7.52%, which is actually not that bad compared to the double-digit, 30% loss we saw a couple of months ago. Gold is down only $110 per U.S. ounce. And we see a strong appreciation from this 1275 mark past 1350 over the last several weeks. What does this mean for ETFs? We'll see in a bit, but with the U.S. government shutdown being completed, things in Syria calming down, people have continued to move their money into gold because they're not sure about the U.S. economy, how growth is actually occurring. And we'll talk more about that on the RTMA on Monday for those of you who subscribe. And gold prices continue to increase, and that is a good sign for our ETFs. Now, here is CGL. It closed up 8 cents on Friday to $12.03. As you can see, not a ton of movement on an intraday basis, but from Monday to Friday, we did see some definite growth. And again, we broke above $12, closed higher than we opened on Friday. MACD and MACD histogram continue to grow. That's awesome. RSI and stochastic have not reached that overbought period yet, and there's still room for it to continue to grow. So as long as gold continues to go higher, CGL will continue to increase, and you can probably expect it, I would say, $12.50 around here again for it to reach, but not get through $13 unless gold, jumps a couple $100 over the next week. But I don't see that happening. But I do see CGL continuing to appreciate as long as gold does. Looking at HGU, it finished up 18 cents to $9.93. We couldn't break to this $10 mark. We tried twice, couldn't do it. We did close higher than we opened on Friday, showing the momentum is with the stock. MACD and the MACD histogram, both are growing, and the histogram bars for the entire week have grown larger and larger each day. RSI is not at the overbought indicator, so there's still room for it to continue to appreciate. Stochastic is green, but it's a little bit flat, and that's due to the uptrend over the last week. I could see this ETF breaking through the $10 mark as long as gold continues to appreciate, and we've tried over the last couple of months to get through there after breaking down end of September. So the last several weeks, we've seen it come back down and test 1, 2. I would see potentially end of the week next week it moving higher as long as gold continues to move up. With gold moving up, our Bear Plus ETF, HGD, fell throughout the week, closed down 35 cents today on Friday to $16.21. As you can see, steep depreciation from Monday to Friday. MACD, negative crossover occurring, heading lower. Histogram bars growing on the wrong side of things. RSI heading down. Stochastic heading down. I would expect it to remain down here as gold continues to appreciate. Once we see this reversal, then it'll be time to get in this ETF. Potentially could hit $15, and before jumping in, I would wait until gold turns around. And I guess at 15 is a good entry point once gold has turned around. Silver pricing, we did see some strong appreciation, but then on Friday, a bit of a decline. It has fallen by $1.44 over the last 6 months, or almost 6%. So not quite the same as gold, and it was much better early September, again, when we had this whole situation with Syria. But again, $1.44 over the last 6 months, not that bad of a deal compared to inflation. iShares Silver Bullion Fund, SVR, closed down 10 cents today to $13.10. Again, not a ton of movement intraday. MACD and the MACD histogram, I gave it a green, could be a blue, but the MACD line is over the signal line. I expect it to stay around $13 unless silver tanks. Now, if silver continues to fall, then so too will this ETF. RSI is flat, and stochastic is negative as momentum has pulled away from silver with the falling prices. Looking at HZU, or Silver Bull Plus ETF, closed down 11 cents to $9.47. Not the greatest. Again, not a lot of intraday movement. Same picture again as SVR. Now, again, RSI flat, stochastic is heading down, and that's definitely due to the closing price on Friday falling. Silver Bear Plus ETF, HZD, finished up 7 cents compared to its previous close to $6.51. And that's due to Friday's silver prices falling. MACD, the MACD histogram, still negative. RSI, flat but turning higher. Stochastic, we have a cross. Now, again, next week, if silver prices continue to fall Monday, Tuesday, this will be the ETF to go into, as it will be a beginning period of decline for silver. But again, while silver is moving down, gold is moving higher, and so we will see those things realign fairly quickly. That's it for us this week. Hope you use this knowledge, help you out with your trades next week. If you have any questions, concerns, comments, please email me at joelchandran@traintoinvest.com. I appreciate everybody who has already emailed me, and I'm glad I was able to correspond with you. Check us out here at www.traintoinvest.com. We have a new Module 1 class starting Tuesday, October 29th at 7 p.m. Central Standard Time. So if you're interested in learning about what we do, or you want to get in on those classes, give me an email, check us out on the website, and we'll be glad to correspond with you and get you set up. Have a great rest of the weekend. Talk to you soon. Bye now.
The organizer